Merry Christmas, Happy New Year's, and if you're watching this video, that means that you have made it to 2025 against all odds, against all the troublesome things that have happened in 2024, against running out of money and the crazy economy and war and all those things. You are here, so pat yourself on the back and get ready, because it's gonna be a rough ride this year. Not only do we have a new president coming in, I don't care what side you on, I don't care who you voted for, we got a new general coming into office, and there's gonna be some new things, and we're gonna jump into that. But you better strap in, because when it comes to real estate, you're gonna see some things this year that you probably didn't expect to see. Now, I know that most people who are tuning into this video, you are not subscribed. That means you have no idea who the market genius is. Let me give you a really quick rundown. Now, I've been selling real estate here in Metro Atlanta for almost a decade, all right? Now, I pride myself off of knowing the market, studying financial data, and I'm also a big-time investor. When I say big time, I don't mean like I'm a millionaire or anything like that, but I've made tens of thousands of trades when it comes to these financial markets. So why should you care if you're watching this video? Number one is YouTube is a crazy place. And unfortunately, people can just get on here and say whatever they would like to say. And you as a viewer, you got to figure out whether it makes sense or not, and whether it's true or not. And unfortunately, it's too easy to lie to people. All right, so here you are. Check this out. We're gonna go over the future of home prices here in 2025, right? From a data-based point of view, not just somebody who's here giving you clickbait. And with that being said, Genius Crew, you know what time it is. Drop the track. Now, I want to thank the subscriber who sent me this little outfit. It's like an essentials. I'm not really big into clothing, but I think it's fake. However, I do appreciate you sending it over to me. And if you would like to send me something, hey, send it on over, because I'll rock it in one of my videos as long as it isn't too crazy. Now, let's jump into the real meat and potatoes here. What's going on in 2025? Now, first and foremost, who is going to buy all of these houses that they're building? You see, right now, home sales are down. Active inventory is vastly outpacing new listings. So who's going to buy these houses? Now, I'm not saying that nobody's going to buy these houses, but the question is who? See, here in Metro Atlanta, they're building so many houses, right? Houses just like these, and they've got a whole entire subdivision that they're going to be building, with another one that's right down the block, and another one that's down the block, really right behind this one, 133 homes. Who are going to buy these homes? You see, the average American family, or should I say the median American family makes about $80,000 per year. Now, if you were to buy a house that's the median home price with today's interest rates, that means you're probably going to shell out about $3,500 per month. Listen, I know you are going to get in the comments saying, well, my lender can do this. Well, hey, the reality of it is $3,500 per month. That's the truth, all right? Now, you can dispute it, fight me in the comments, say whatever you want to say, but I know what I'm doing. I'm the professional here, all right? So $3,500 a month is what it's going to cost you for the median price home here in the United States. That breaks down to about $42,000 per year. Now, if you are making $80,000 per year, there's no way that you can afford $42,000 per year just to buy a house just like this. So my question is, who is going to buy these houses this year? Now, there's something I want to talk to you about. It's like an investing term, right? So being that most people, probably you watching, right, you probably don't invest in the market, so you don't understand what's called a bid-ask spread. Let me break that down to you, okay? It's very simple concept for you to be able to grasp, trust me. The bid is what somebody is willing to pay for something, all right? In this case, we're talking about stocks, but I'm really relating this to the housing market. The bid is what somebody's willing to pay. The ask is what someone's willing to sell it for. And the spread is the difference between the two. Now, here in 2025, we have a very, very big difference between the bid and the ask. That difference is called the spread. Now, why is that important? You're probably thinking like, okay, well, duh, people out there, they have an idea of what they want to pay for something, and the sellers have an idea of what they want for something. So why does that matter so much? Why are you talking to us about this? Well, here's the thing. There's something or someone in the middle, which is called the market maker, all right? The market makers are the people who are responsible for sales or trades happening, right? And so what the market makers are going to do is they're going to do something this year to limit the gap between the bid and the ask. They got to get people buying homes, okay? Because right now we're at a 30-year low for some markets, 40-year low for other markets. These banks, they're not making any money if people aren't buying homes, all right? Remember, a mortgage is like the number one financial asset that banks are making money off of, at least when it comes to consumers, all right? So the market makers are going to do something which is going to make that change up. Either they're going to make home prices come down, or they're going to make you have the ability to be able to pay more for a home. Which one do you really want? As a consumer here, which one is best for you? Do you think that home prices coming down are better, or interest rates coming down are better? Because it's probably going to be one of those two things that ends up happening. Now, me personally and professionally, since you're here, right? Me personally and professionally, I think that it's best if interest rates stay high. And I know what you're thinking. Well, why would you think that? Well, here's the thing. Number one is you do not have to pay interest, right? Believe it or not, you don't have to pay interest. You know why? Because if you make one extra payment on your mortgage every year, that's going to shorten your mortgage by about 7 years and cut out about $150,000 in interest. So me personally, I think that it's a great idea to keep interest rates high, because if you keep interest rates high, that means that home prices are going to have to come down to where that bid is, like we just talked about. What do you think? Would you like to make more money so you can go into more debt, or would you like things to stay where they are now and asset prices, like real estate, come down? Now, one of the more unfortunate things about real estate and honestly capitalism in general is that there's always going to be winners and losers, all right? Now, some of you, maybe you even watching right now, you're never going to be able to buy a house unless you move to a more rural area or a less populated area, all right? It's just time to face the music. If you 100% feel like you have to buy a house, you're not going to be able to do it in a place that everyone else wants to live. And you know what? In my opinion, I think that that's okay. We live in a time right now to where everybody wants to be followers. Everybody wants to live in the hottest places, LA and Miami and DC and New York and yada, yada, yada. The list goes on. I don't even like being around people like that, you know? If I did not have a business to where I had to serve people, then I would simply just move. I would move to the middle of nowhere and be totally fine day trading and just taking care of my family. I don't need to be around. My wife, she loves being around in Atlanta. She wants to go to the restaurants and things like that, and I respect that, all right? I like a good meal too. But for many of you, if you want to be able to buy a house, you're going to have to get out of the city and go find you a rural place. I just saw a house down in Griffin, Georgia that was on 2 acres. I think it was like 4 bedrooms, and this house sold for like $130,000. So you could come up here and get you a house. It's like one of those way over there, right? And You tell me what you think they're going to charge for these townhomes, because I'm telling you, these townhomes are going to be every bit of $300,000, which is insane. I remember back in 2019, 2018, I was selling brand new townhomes just like these for 160 grand. So yeah, you be the judge. Now, for those of you who say that real estate is going to continue to rise, I'm not going to say you're wrong, because historically that's what we've seen. So me being a database person, I would be crazy to say that long-term real estate isn't going to rise. But there's a problem, and I think that this problem hasn't been talked about enough. And it's, what do you do with this work from home thing, right? Nobody who used to work in the office and now works from home wants to go back into the office. Nobody does. And that kind of throws things into, a bad mix for developers, because you don't know where to build, right? Traditionally, people used to want to be close to their jobs or within, 45-minute commute, whatever. But now that we have work from home, and not only do we have work from home, it is here to stay. Work from home is never gonna reverse. So what's gonna happen in these markets? I always joke with my wife, and I'm like, we have a 2-year-old. And I'm like, hey, do you know that she will probably never know what it's like to work inside of a skyscraper, right? Inside of a cubicle and things like that. Do you think the kids will? I don't know. But work from home is here to stay. So when we're talking about the future of real estate prices this year, right? Are homes closer to the city? Are those going to be easier to get than they were? I have a client who's shopping like in West End, Southwest Atlanta, Southeast Atlanta. And I remember like these areas used to be highly sought after because you're like 15 minutes from downtown. But now, brand new houses are sitting. Brand new houses. And these are good price houses. Brand new houses, $375. Gentrified houses, whatever you want to call it. These homes are still sitting. So, when it comes to the prices, the suburbs, things like that, would you rather move closer to the city, knowing that you don't have to go to work, but you're still closer to the city, or would you rather live in the suburbs? See, the suburbs offer a different vibe, right? Generally speaking, the suburbs are safer, better schools, things like that. So, what do you think? Now, as we get prepared for our new president, President Trump, I guess it's a new president, right? He's been president before, but it's new this time around. Should he or will he do anything about institutional investors purchasing single-family homes? Because, see, that's a touchy topic. I mean, I get it. Investors, they're looking for the best yield. And I mean, I don't even know. This neighborhood may end up being, built for rent. Because D.R. Horton, they sat back on this neighborhood. I mean, they've probably been wanting to build this neighborhood for 2 or 3 years right now. And they sat back and they weren't able to build it for whatever reasons, permits, timing, whatever, right? Should Donald Trump do something about institutional investors purchasing single-family homes? And if you think that he should, well, what do you think he should do? Should we limit the amount of homes that a single-family investor or institutional investor can buy? Do we have certain areas that are good? Or do we just outlaw it altogether, make them sell all their inventory? Now, I don't think Trump's going to do that, but maybe I'm wrong. Because people are arguing that, okay, the institutional investors, they're snatching up inventory that should be for, owner occupants. And you know what? That's one point, okay? The other side of it is that like a lot of institutional investors, like some of them, they do all right. Some of them do all right. They're not slumlords, and a lot of the stories that I hear about slumlords are actually individuals, not institutional investors, right? You tell me, if you are renting right now, what has your experience been? Have you had a worse experience with an individual investor, or have you had a worse experience working with the institutional investor, like the Progress residential types of the world? Which one has been better or worse? What do you prefer? And then more importantly, what do you think that the new president is going to do about that? Now, the number one mistake that people make, and that's whether they're buying or selling real estate, right, is working with the wrong professional. I'm going to give you a couple of things that you should look for in your next real estate professional that most people are not going to mention. Now, let's talk about some of the mistakes, all right? First and foremost, most people, when you are ending up buying or selling real estate, you're just going to hire somebody based off of how they look. And I know it sounds weird, and it is extremely weird, because I can't think of any solid reason that you would want to spend $300,000, $400,000, $500,000 with somebody just based off of the way they look. But you people, you do it all the time, all right? That's one mistake. The next thing is just going with people just because. Just because you saw some photos on Instagram, right? Just because they're your friend's girlfriend, all right? Or your friend's son, or whatever, right? These are all terrible reasons that you should trust somebody with the decision for, like I said, $500,000. Why would you do that? And the ramifications of that are starting to show. So, with people now wanting to sell houses that they bought in the last couple of years because maybe they felt rushed, they didn't buy in the right area, what they're finding out is that their house is no longer worth what they paid for it. All right? And so they're in a situation to where they can't sell, or they're going to have to do a short sale. And of course, if you don't really have to do a short sale, you're just going to stay put. You definitely can't rent it out if you bought it in the last couple of years, because you're not going to make any money. All right? So the mistakes are starting to show up. Even these days, I see homes that are sitting on the market right now. And I had a lady on the plane. I was flying back from LA. I had a lady ask me, she's like, I heard her over talking with another one of the passengers, and she was telling her like she's selling her house in a really nice area of Atlanta. And I'm like, okay, yeah, great. I'm like, hey, by the way, I'm a realtor. I'm not trying to steal your listing. I just heard that, you're selling your home, and, I just wanted to wish you good luck. How's everything been coming along? Well, we've been trying to sell this house for 7 months. Oh, really? That's great. How much are you selling it for? Oh, it's going to be like $800,000. Oh, okay, $800,000. And by the way, just out of curiosity, are you paying the agent 3%? Yeah, I'm paying the agent 3%. Okay, well, what kind of marketing plan have they put together? Oh, I don't know. This lady's paying somebody $24,000 approximately to do a job, and they didn't even give them any marketing plan, didn't tell them what they're advertising, what they're spending advertising dollars on. They're literally dropping a sign in the yard, popping it into MLS, and doing a couple of open houses here and there. That's their plan. And so this is what I'm saying. You better be careful with who you do real estate with. All right? Because you are going to get screwed in the long run. Today is not the time to where you can just do something like it was 20 years ago and it's going to end up working out. A lot of people are going to end up in bad situations just because of who they hire. But you don't have to take my word for it. Go out, try it yourself, and you'll see what happens. But if you don't want to be one of those people, I got a couple of things that you should look for in your next realtor. Number one, any realtor that you are working with to buy a house should be able to thoroughly explain how interest rates are calculated, what the future looks like for interest rates, and be able to show you them on a chart. Do not trust anybody who does not understand how interest rates are calculated, what's happening with them in the future, and they cannot read a chart. I know some of y'all, you can't do all three. And you're probably like, I can't hold that against somebody. Do what you want, but I'm telling you, coming from a realtor's perspective, if they can't do that, don't work with them. Because they don't know what they're talking about. So that person who's telling you that you can buy now and refi later, because they have no clue about how interest rates work, and they can't show you, guess what? They just talking. Number two, if you are going to work with the realtor, they should be able to show you localized data about the market. Some of that data should be their own, not third-party data. But them being able to show you some data, it's a start. But they should be able to show you some of their own data. Because if they don't have the mind and the aptitude to go in and say, this is how long homes take to sell. Homes just like yours, not everything in the market. Homes just like yours, this is how long it takes to sell. Homes that you're trying to buy, this is how much they're selling for. This is the difference between listing price and sales price. If they can't show you that original data, don't hire them. Don't hire them. Why? Because when it comes to price your home, they don't know what they're talking about. They'll probably pull up Zillow and they end up losing you money. Or time. Or both. When it comes time to buy you a house, they'll just throw out anything. They don't know what they're talking about. You understand? So if they can't give you some data that's original, don't trust them. Don't hire them. Do it at your own risk. That's up to you. I don't care what you do. Because to be honest, I'm almost to the point where I'm sick of trying to wake people up. And I'm not trying to wake people up in the sense of, hey, this market's going to crash or whatever like that. I just want you to make the right decisions like my clients have. Ask any of my clients in almost 10 years of doing real estate if they were satisfied with the information that they were given and if they felt like they were guided in the right way because of the data that they were given. Go ahead, ask. Look me up online. Almost 10 years of doing real estate, nothing less than a 5-star review. Not anything less than a 5-star review. So, I'm giving you the game on what to do. Whether you do it or not, that's on you. Last, most importantly, do not hire a realtor if they have not demonstrated their ability to understand financial markets. Folks, do not get it twisted. You spending $400,000, $500,000, $600,000 on something just like this back here, that is not you buying a pair of sneakers. That is truly a financial decision and an investment. So, if someone has not demonstrated the ability to understand financial markets, how on earth can you trust them and spend a couple $100,000 based on what they're talking about? I know so many realtors. They can't read a stock chart. They don't understand earnings reports. Some people don't even know that D.R. Horton has a stock. Let alone can tell you what's going on. They didn't listen to the earnings call from D.R. Horton. I did. I know what's going on. I've got my posts on the market. All right? And you better not hire anybody who doesn't understand that. If they can't understand or tell you what's going on with these financial markets, don't you spend that money with them. Don't you do it. There's somebody else that's better. Or do it yourself. But I promise you, 2025 is going to be the year that you see people openly regretting who they work with as a realtor. Now, if you have made it this far in the video, you owe it to yourself to like this video, of course, because you made it this far, like it. But subscribe. And here's the reason why I say subscribe. This information is never going to get out to more people if you don't subscribe. If you feel like the information was good for you, go ahead, subscribe, so of course you can get more. But subscribing lets other people know that this is good information. And this is a place and a community that they want to be part of. Because I'm telling you, I'm about to drop the community to where you're going to learn about investing. You're going to get exclusive information from me that I can't even share for free. I got so much information that I'm telling you, like, there's no way I would give it away for free. All right? Not that I want people to pay, but I value myself. I value my research, and I want to give it to people. But I need it to be in a private place. That way I know I'm working with people who are attentive and want to do better and want to grow when it comes to real estate, investing, etc. Lastly, if you got just a couple more minutes, please watch the video that's on your screen. Because that video is probably better than this video. And you're going to learn a lot more about me, about the markets, and you too can become a market genius. But I am the market genius, and I'm out. Peace.